Hi everyone, good evening. Welcome to my Q&A Monday. So as always, I'm always going live 5 o'clock every Monday just to answer some questions. And the topic that really stood out from the past week is about business. If the business is incurring a loss and what they can do about it. So as we know, businesses, of course, we all want our businesses to be profitable, but it's always not the case. It can be at the beginning that the business still takes some time to take off. Perhaps you need to pay for some resources at first, and then get the business to start running, and then when it's like you get enough customers, you get enough exposure, and the business starts making profits. So it can be at the beginning, or it can be in the end, the business probably not running as well as before, and you're thinking of just closing the business down because it's no longer profitable. So that can incur as well. So today we are going to talk about what if your business is incurring some losses, and also there's some differences between if you incur the loss as a sole trader as well as if you incur the loss as a company. Okay, so first of all, if you're starting a business as a sole trader and you are making a loss at the first year, so if like lots of business startups, or if you're solopreneur, you might be at first you have a salary job to make sure you have the sufficient financial support, and as well as the same time you build in a business on the side. So if your side business is making a loss at the moment, but you have a full-time job or you have a part-time job to support your income, and that job you are paying, your tax has been deducted before you get paid, so you can use your business loss to offset your salaried income so that you can get some tax back. And what if you don't have enough for the current year? And of course, because we all have a personal allowance, if you think it's not beneficial for you to offset the current year, you can offset previous year as well. So, for instance, currently you only earn £10,000, which is under the tax-free threshold for personal tax, and then you have a business that is making £2,000 loss. So if you're offsetting the current year, there's no benefit for you. But what if your previous year's income is like 30,000, and you paid tax on it, and you can use that £2,000 to offset previous years, and you can get some tax back. So whatever is beneficial for you. But if you don't have anything to carry to offset to current year, or you don't have any to offset to the previous years, then you can carry forward. And if the second year it becomes profitable, and then you can offset the second year's profit. So either way, you can always get some tax relief from your losses. Of course, here it's just some sort of warning. Of course, there will be like some relaxation on the losses. But what if the business, of course, it keeps incurring losses? There's definitely nothing to offset. So of course, this is the time you need to think if that's a profitable model for you to think about. And secondly, there's no tax benefits at all, and then you might just want to close down the business or just stop trading. So that's for the sole trader. And what if you set up a limited company? So I would say the rule, they are very similar, but also can be different. So for sole trader, it's like it's relaxed, basically. You can use it to offset your other income. But if you're having a limited company, run the business through the limited company is a separate person than you. So if the company is making a loss, the loss cannot use to offset your income. So that's probably people find it beneficial at the beginning. They just set up as a sole trader if you are making a loss, because they can offset the trading loss as a sole trader towards the salaried income or other income, so they can get some tax back. So the other income here is also includes capital gain, but again, capital gain, if you do have capital gain, there is annual allowance of about 10,000, about 11,000. That's rough number, every year, roughly every year. So you will also need to watch out if if you use that to offset your capital gain, and make sure you don't waste that personal allowance, the annual allowance. So basically for you as a person, you have tax-free allowance for both income tax as well as your capital gain. So your loss strategy should also consider this as well, and make sure you don't waste these allowances. Okay, but for a company, the company doesn't have any of these allowance. So if you do incur loss, but at the same time, you probably one company running two kind of business activities. One is profitable and one is making a loss. So the current year, you can use the current year loss to offset other income. And other income also includes the income like you're earning the interest from your business savings. So you can use the loss to offset that as well. Make sure you pay as little corporation tax as possible for the current year. So what if there's nothing else left for you to offset? Of course, the second thing to consider is carry back to the previous year. So if you do have a trading history and you were making some profits before, then you can carry back for the previous year to offset that. So in that way, you made the declaration on the corporation tax and you get a tax refund from the government. So that's the way you do it. So firstly, consider current year, and secondly, consider previous year. So here, the difference would be, for the sole trader, there's some flexibility, because you can use part of the loss to offset current year and part of the loss offset previous year, because there is a tax-free allowance. But because company, you don't have that. So if you are going to offset current year's profits, you have to offset the current year's profits completely first, and then carry back any unused losses you will carry back. You cannot just partial offset current year's profits for the company. But again, the strategy will be consider the current year first, and then consider the previous year. But what if nothing gets left? You will carry forward to the future years. So if the next year you are making the profits, then you can use that year's loss to offset your future profits, and you get tax relief as well. But in order for you to get the tax relief as soon as possible, the order to consider, no matter your sole trader or business or company, so always consider current year first. If not, then previous year. But if nothing else, then carry forward to the future years. So here's also some warnings about if you're running a company, especially you have different trade, and you want to carry forward for the future years. You can only carry forward to offset the future profits for the same trade. So you cannot cross match it. But there's a current change on the rule. So if the losses are incurred before April 2017, you can only use it to offset the same trade, the future profit of the same trade. But if that's after April 17, that is relaxed. So you can use it to offset any profits. But the trade-off is there will be the loss restriction as well. But for most of the companies, most of small companies, you are not affected because the restriction, unless you are making the profits of more than like £5 million, then you're not restricted at all. So that's just some relaxation after April 17. Okay, what if that's the final year of trading, you have some losses? So you can use that loss to offset your previous 3 years profits. Then you get some tax back that you have paid. So that is how you can, as a recap, we have been through, there are some differences between sole trader and companies. What if your business is making a loss as a sole trader or as a company? It's very similar, but there are some differences. So for personal, you will watch out for the tax-free allowance, like for both income tax as well as a capital gains tax. So you will, because for personal tax point of view, if you're making a loss as a sole trader, there's some flexibility for you to choose to offset part for current year and offset part for the previous year. So whatever is beneficial for you, but company, we don't have this kind of flexibility. And also there are some changes between April 17. So before April 17, any losses being carried forward, you can only use that loss to offset the future profits of the same trade, same kind of activity. But after any losses incurred after April 17, you can use that to offset any profits. Okay, so the title of this video is called The Art of Utilizing Your Business Losses. So as we say, it's both a science and an art. Of course, there's a tax rule. There is always rules out there. We have to be compliant. We cannot bend the rule. We cannot go against the rule. So we have to play around that. But also the art is things like sole trader. There's some flexibility, so we can always make a choice to offset parts that is beneficial for you. And also for both company and the sole trader, we can always have the order in place to make sure you get the tax relief as soon as possible. So that is consider the current year first, then carry back to the previous year, and then if nothing else, carry forward to the future years. And of course, like said at the beginning, if there's no need for you to set up a company, and especially you see your business is making a loss, it's probably better for you to stay as a sole trader, because you're able to offset your sole trader losses to your other income. Okay, so that is what I'd like to mention about utilizing the business losses to minimize your tax bill. So if you find this free video useful, just so you know, I do go more in depth with my retainer clients for both companies and sole trader clients. So if you do like more personalized advice, or you do have some tax issues that you only want to talk to me about confidentially, be free to personal message me, so we can set up a chat from there, and we can go through your circumstances and see what's the best solution for you. Okay, again, I hope you find this one useful, and I hope you have a wonderful evening, and I shall see you very soon. Bye now.